What's going on, everybody? It is Fantastic Friday, and we all know what that means. It means we have our favorite West Coaster, Michael Zuber.
I am your favorite West Coaster. Such an honor.
It is, and it's always Saturday in Mike's world.
Exactly.
So I am actually taking the much more casual look, nothing lumberjacked up, except make sure I have my lumberjack colors from this amazing hat from my buddies at Custom House London. If you are into cool gear, they've got a ton of cool gear, love their stuff. And they didn't pay me to say that. It's just, I love their stuff and they have some cool colors that you can't find in other stuff. So I'm just like, I love their stuff. And so it matched my polo. And now we're matching. Now we're the lumberjack matcher today.
I love it.
But Mike, had to talk about this. Rates, as you know, crazy story, 10-year all over the place, hot PCE, you name it. There's always something every single day that creates some sort of a throw up ride in rates and or the 10-year. So let's talk about it. What are you seeing? What are you thinking? And then we can kind of jump into what we're, where this is going to end us up. What are your thoughts?
Yeah. So the 10-year is behaving oddly. At least it has been matching expectations kind of the last 2 weeks. And I think PPI came out first, then CPI. So producer price index and consumer price index. And then ultimately just this morning, PCE, which is the favorite gauge of inflation for the Fed. So for the first two, those readings were hot, which meant inflation was bigger than expected, but the 10-year went down. And in one of those cases, it went down a lot. What the hell is going on, right? And then the PCE came out today, kind of met expectation, but it was hot again. It was 3.9, core was 3.4, met expectations. But now we got 2 months in a row of PCE above 3.4%. Now we can call it trend, right? You can't do it with a single data point, but now we have two, likely to have another one in a month. And the 10-year looks like it broke above 1.5, and it's been range bound for a while. It did pop above that. I think there's a general feeling that the Fed is going to have to raise rates earlier rather than later. But I would say the 10-year is not behaving. It almost feels, I'll just say it feels manipulated. Feels like the Fed is throwing an unlimited amount of money. It's being the only buyer at auctions, and just some abnormal things that you and I won't see because the 10-year dropping after, I think it was CPI, was like, what? How did that happen?
Yeah.
Just some weird behavior. But so the 10-year is finally broke above 1.5. I think it's been range bound for 2 or 3 weeks. It could be a new trend starting. But yeah, that's what I'm seeing in the 10-year today.
Yeah, I mean, it's 1.5 over the last few weeks, 1.58 down to all the way down to 1.3. It actually had a handle on it for a few hours.
Yeah, 1.39, 1.38.
Yeah, and then pretty consistently kind of 1.58 down to 1.43, kind of in that range. Mm-hmm. The amazing thing is that I track how that correlates to actual portfolio rates from banks.
Yeah,
and what was crazy about it was when it was 1.625. About 30 to 45 days ago, when it was 1.625, rates were at about 4.25. Okay. Rates are about 4.25 at 1.625.
Okay.
We ride it down to about 1.48, all the way down 4.25, 4.25, still 4.25. And I'm like,
what the hell?
There's correlation here, but there's not correlation here. And so I'm looking at it and saying, this makes absolutely no sense. The 10-year is down literally, 0.2, almost 0.2 off of its previous high of a month ago. It's off 0.2 and rates are exactly the same. And what was crazy is then it goes all the way down to that 1.48, 1.45, and then kind of sits in that range for a little while. Yeah. Then when it pumps up to 1.5, as soon as it hits 1.5, all of a sudden the rates are 4.5. And I'm like, I'm literally nicely yelling at my bank saying, guys, this is a complete dislocation. I need to understand how you're pricing this because it makes no sense that at 1.625, it's 4.25. It goes all the way down to 1.43 or 1.42. It's still 4.25. And then when it bumps up to 1.5, now I'm at 4.5. Yeah. That makes no sense whatsoever.
Yeah.
So this is the stuff that you and I talk about all the time, which is that market dislocation, right? Which is the banks are assessing risk differently right now than the market is on the 10-year. And because they're
Yeah.
assessing that risk differently, you're not seeing that movement on the rate side. You're seeing that they're actually saying, nope, this is our new norm. Now it's 4.5 on a portfolio deal.
Yeah, I think that's very well said. I think I've talked about it a lot of times, but these last 3 weeks have been a great real world example. Is banks have the money, banks make the rules, and sometimes they are. I call it greedy and fearful.
Yes.
Basically, they get to set what their risk premium is what
That's right.
what you've highlighted.
That's right.
And right now we are entering a period where banks feel like there's more risk, so they're going to raise the rates. But there's something else going on, and this it's not only rates, but right now. Their yes box, right? They're the people who can get a yes answer from a bank is shrinking.
Hard, fast. Yep.
Yeah. I mean, this isn't quite as bad as last April, where basically JP Morgan said we're not doing loans, period.
Right.
Not that bad, but it is certainly worse than a month ago. And I'm talking substantially worse, both for investors and owner occs, right? Owner occupants, it's harder to get a yes answer today. And it's just, there's something going on that you and I aren't seeing, but we see the behavior in banks.
That's right.
That's what you get by being in constant contact, is you can see when they're giving you different structures and charging more rates or more fees. They're clearly seeing risks in the economy.
Can they see who those buyers are in those treasury markets? Can they see that because they're banks? Can they see who is buying that stuff or no?
Yeah,
because I don't know the answer to that.
Yeah, if the bank is if they're big enough to be trading at that window, right, which is where they buy the bonds, yeah, they can see who the buyers are.
Interesting. I mean, at the end of the day, what always scares me is market dislocation, right? Because so long as there's correlation of things, okay, well, ticking up higher, ticking down lower, so long as there's a synergy and correlation between them and things are related to each other, that makes sense. When you start to get something out of joint and something gets dislocated, well, that's what then upsets the apple cart, and then all these other items start getting dislocated, and then before you know it, your yes turns into a no, and now you need to adjust your 51% debt to income down to 42%. And you hope that that's enough, right?
Exactly. Well, one of the reasons that I follow the consumer for the last 20 or 25 years is I'm always trying to find pivots. To me, the world is very simple. Are you greedy or fearful, right? You can call it, you can change those words, but there's a spectrum. All of us, all banks, everyone are in, and I'm trying to figure out where the consumer is. That's all I'm ever trying to figure out. Are they more greedy or more fearful, right? And it's always going one way or the other. Because if you can figure out when that changes, like if we go on for the last year, we've been very fearful, but it's been coming back ever so slightly. And then if it starts to swing greedy, like we're going to do revenge buying, and, we're going to be in a rush to get married, and, all of those things which are occurring right now, you're like, ooh, well, what does that mean? Where's the dominoes fall after that? So I'm always trying to find those pivot points, and we are in the middle of one right now. It's time to pay attention.
Yeah, Mike, I mean, honestly, all those people that bought your course the second half of last year need to give themselves a big old pat on the back.
Yeah,
honestly,
they're doing the work. Yeah.
Right. If you bought that course and you're doing the work, you are primed and ready, and you probably made a purchase before all this lunacy started.
Yeah.
And if you haven't yet, now's the time to absolutely get in, really understand, so you can understand what your market, so you can understand what we're talking about when we say dislocation, so you can understand what we're talking about when you're talking about finding the right property. Now is absolutely the time for that to be happening, because who knows what the next 30, 60, 90 days carry.
Yeah.
But that's why you need to know this stuff even more so now. That's why it makes it even more important to understand this. And we all know haste makes waste. You don't buy the course and then make an offer next weekend.
No, you got to lay the groundwork, right? It's got for the best of students, they can start to see and learn the market in 30 days, but most folks it's 60 days.
Sure.
So if you want to start writing offers in, I guess that would be September, you should be buying the course now, right?
Yep.
And oh, by the way, I'll throw it out here. There's a June coupon code, June 50. If you buy it in the next 5 days, you get it for $250. I did that because I have all this extra bonus content coming. It didn't land in June. It's going to land in July. So it will be $300 in July, but I'm giving a little discount in June because some content is delayed. But yeah, and it's funny. People are doing the work. I got 2 emails this week from students who made lowball offers, but they happened to see the market was changing. One was on a condo. We got it for 15% off. And Somebody just picked up 2 houses that ended up being a probate for $20,000 less on each. So
Oh,
if you're doing the work, you can see these little subtleties. They almost speak to you, and it's so happy. And we got more and more people winning these things
that's awesome.
almost every day, right? So it's pretty cool.
That's awesome. Guys, if you're not in the game, again, got to be watching the 10-year, got to be watching and talking to your banker if you're in the process of getting that first, investment property. Also, if you're just looking to add additional, you need to be talking to your bank now. You need to be talking to your mortgage guy now. Understand what's going on in the market, because likely the numbers that you were even using a month ago are not the same numbers that they are today. This is ebb and flow. This is going to be ticking up. I think it's going to continue to get hotter. And with dislocation, that's the scary thing about dislocation, is you have no idea how hard and how high and how fast it's going to go. You truly have no clue. If it's normalized now and you're at 152 and that still means a 4-5 portfolio loan, well, then what happens if it bumps back up in the range to that 1625 or 165? Does that now mean a 4 3/4?
Probably.
I mean, that's what we're now talking about, because I'm just, I look at it now and just say, well, at this point, just let it ride, because I think that there will be some reports that come out that will knock that thing down in a window, a very short window, and you have to be actively watching it to take advantage of that.
Yeah.
So,
yeah, I would tell you folks, now's the time. Again, the beauty of what we teach is the 30-year money.
Yeah.
Get 30-year money.
That's right.
Right.
That's
This is not a time to do, a 3-5-year arm. That's too much gambling for me. Don't do it.
Don't do it. No, take that 30-year fixed money. It was funny because I looked at some of the 30-year fixed stuff, because 10 years ago, I was still buying properties in that first 10. And so I looked at those, and I actually had a 5.65 mortgage in there, a 5.65 mortgage rate in there. And I was just like, unbelievable. And we took the opportunity to refinance, because even though we're refinancing it at a commercial rate, we only had like 10 years left on it. And it was like, it was such a ridiculous reduction in the payment. Like it cut the payment almost in half.
Yeah.
So yeah,
rate and term.
Yeah. Huge opportunity. So Mike, where can everybody find you, my friend?
Go to your Google search bar and type in One Rental at a Time. You should see a book, a YouTube, Instagram, website, all that good stuff.
Yeah. Awesome, Mike. Hey guys, subscribe, hit the thumbs up if you like this stuff, which I know you do, because if you don't, you're definitely not wanting to be a real estate investor. So make sure to hit the thumbs up, subscribe to us, and watch for segment 2. It is an update on my over $1 million off market deal. Can't wait to talk you through that, Mike.
Go.
All right. Talk soon, my man.